Not a day goes by, right? I mean, warnings and concerns about the housing market, they're mounting. Now, this morning in my inbox, Political called this a situation a lose-lose. And, well, there have been even more sensational headlines like this one from the Daily Mail saying that realtors have hit the panic button. Now, some parts of the market, the housing markets, have already crashed, folks. I mean, second quarter of 2025, what they call the vacant property zombie report, 1.4 million residential properties. That's up big time, 1.3% of all U.S. homes. So they're vacant, right? They're zombies. 13 consecutive quarters. Well, this number has been around that level. So, you know, obviously people drive through these neighborhoods. You see them, you know what we're talking about. And then, of course, this morning, we learned that mortgage applications were down yet again, third week in a row. And this is refis and purchases. Now, part of the problem is that there are now a lot more sellers. Look at this chart. This is fascinating. A lot more sellers than buyers, all right? 1.9 sellers, 1.45 potential buyers. Now, my next guest has the best insight that I've seen on the street when it comes to these numbers and really the nuance of these numbers. I want to bring in now Resi Club co-founder, editor-in-chief, Lance Lambert. Lance, welcome to New York. Welcome back to New York.
Thank you for having me.
Let's talk about this overall problem. For me, this is the stat that stands out most, right? Let's bring that back before we go to Lance's chart, because the more sellers than buyers, obviously the tables have tilted. It's a so-called buyer's market, and yet it doesn't feel like it.
Yeah, so what's occurred is that during the pandemic housing boom, there was so much demand that came in at once. Those ultra low rates, all the money that was printed, all the remote work, there wasn't enough supply in terms of units out there to meet that demand. So the demand all didn't get to transact and prices overheated. They soared. And so once mortgage rates went up 3, 4, 5, 6, 7, that reality of that deterioration became apparent. And so the market we're in now is slowly active inventory is rising, completed unsold new construction is rising, and the power dynamic is moving more and more from sellers to buyers.
Let's look at this. I want you to look at this chart with me in the audience. So the year-over-year metro level changes. It's interesting because the red areas are all areas that were super duper hot for a while, right? We're seeing Florida, Texas, Phoenix. These were the areas that were sizzling just not long ago, and now they're starting to come down. Is that typical?
Yeah, it is typical with housing. Often the growth markets are the ones that get the corrections, or the deeper corrections. And so what occurred during the pandemic is those markets saw prices go up more. They had a lot of people move in. And they have just more new construction. And so as that migration is less of it's coming in, so they have to rely more on local incomes, that's created a demand shock, a greater one there. And the builders for multifamily and single family, they have to move that product. They're going to